So I've been running heaps of these seminars, and what I wanted to do was take you through some of the questions that I've been getting. We recorded the first lot a little while ago. You'll notice the yellow shirts. Well, I've got a pink shirt on today. So we've got about 25 questions to get through. And you can watch them. They'll be separate videos, so watch them each as you go along. But guys, any questions you've got from the webinars, or any questions you've got in general, if you email them through to me, just send them through to info@ypc-group.com. And what I'll do is I'll actually record a video response, so you get the answer in video as well as putting a blog together. Because one of the fundamentals of building a property portfolio is actually getting really good education. If you can do that, then you can confidently move forward. And that's really what this is all about. This is what this education series is about. It's why I'm in front of the video so often, is because I want to get that education out there. So let's get started. All right, guys, I get this question a bit, and it's basically UK or Germany. It's one of these things where, look, I get hundreds of questions about, should I be investing in Spain, Portugal, Cape Verde, Caribbean, all these sort of places, how do they compare to the UK? Look, UK, and this particular question, UK versus Germany, all right? And the question comes something like this. UK is overvalued 20%, Germany is undervalued 20%. I can make a better return out of Germany, all right? I think that's very naive, and what you probably find is the client that said this has been speaking to a salesperson who sells German property who's saying this. They're very different markets, okay? Germany, notoriously, very, very structured, very, very, what do you put it, restrictive legal framework, okay? It's not a property market where you buy and sell lots of property, okay? Most people rent the properties they live in. They don't own them, okay? And properties that they do own, they'll pass down the generations and that. So there's not a lot of capital growth, okay, at all, ever, all right? Now, you might say it's 20% other. When you compare it against other markets in terms of price, okay, yes, you might say it's 20% under. But the question is it likely to lift up that 20%? I don't think so, For me, it's a much different market. And look, I always say this, core strategy, The mistake so many people make is this, all right? And I see it all the time, which is the dinner party portfolio, which is where they want to get investing, so they say, I'll take a bit of that, and 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 a bit of that. Before you know it, they end up in 4 or 5 different property markets, 4 or 5 different tax regimes, 4 or 5 different market cycles, 4 or 5 different, selling things, 4 or 5 different, all this sort of stuff. They've got different agents, they've got different laws, they've got different, all this sort of thing. And you try and coordinate that. Look, I deal in property all day, every day. I live, I wake up and think property. I go to bed, I think property. That's just what I do, all right? It's my passion. My passion, it's the expression of my passion. My passion is actually helping people and, building portfolios and things like that. In actual fact, property I could care less with. Property is just the vehicle we use. But the fact is, I deal all day, every day. I'm in the Australian marketplace, I'm in the Spanish marketplace, and I'm in the UK marketplace, and now I'm looking to get in the Singapore marketplace. And I can tell you, 4 markets, I'm full-time, I deal with it all day, I don't have another job, this is what I do, and I can tell you, I don't have enough time in my days to follow all those markets. So what happens? I keep up to date basically with the Australian market. I keep up to date, in fact, I pretty much neglect the Spanish market. All right, I just buy and hold, forget about my properties there. So I know the UK, and now I'm learning the Singapore. 2 markets for me to know at the level of detail that I suggest if you want to be a professional investor. That's more than enough, So if that's the case, and this is why I say core strategy, what you should be doing is you should be focusing on one. Now, if you're living in the UK, focus on the UK. If you're living in Singapore, focus on Singapore first. That should be your first market. That's where you build your base. If you live in Hong Kong, Hong Kong. US, US. Okay? So whatever market you're living in, that should be where you build your base. Then once you've built your base, and only then should you be looking outside of that marketplace. Okay? And when you do it, don't go into obscure assets like hotel rooms and student lets and things like that, unless that is going to be your core strategy, all right? Now, core strategy for most people should be a residential house, okay, that one family is going to live in, that basically, the standard type of stuff that you would expect to live in, that's what you should be buying, because that's what you know. Unless you're going to follow a specialized strategy, okay, and you're going to learn all the rules applicable to that strategy, and you're gonna learn all the deceptions and myths and all the BS and hype around it, so you don't get caught up in that, because that's the mistake most people make. Now, coming back to UK or Germany, okay? UK, if you live in the UK, that's your home market. Germany, if you live in Germany, fine, go after that market. If you don't, be very careful about that and realize that it's not your core strategy, it's a specialized strategy or an alternative strategy, okay? And if you treat it as such, then you should be okay. But let's not compare UK and Germany, and try and put them head to head and say, where am I going to make the better returns? Because I can tell you, if you live in the UK and you're investing in Germany, you're probably not going to make the returns that you think you're going to make or the salesperson says you're going to make, all right? It's very easy to make something look much better than it is. That glossy brochure they're showing you, that nice little due diligence or whatever, that can be, say anything, all right? So be very, very careful and make sure you do lots of due diligence, okay? Because they're very different. It's like apples and oranges and trying to compare, all right? They're not the same thing, yeah? So I'm not saying don't invest, and you'll see. I don't say don't invest in student pods. I don't say don't invest in hotel rooms, don't invest in all that sort of stuff. But if you do, you had better know the rules of the game. You'd better know the deceptions, the myths, and all these sort of things. And if you don't, and if you're not sure, then give the team a call and they'll ask you some specific questions about those things. If you can't answer them, don't you dare invest in that investment, okay? Now, let me ask you, residential property, the type of home you live in, if I was to ask you general questions about that, you're probably going to be able to answer them, which is fundamentally important. If you can do that, then it's okay to invest in, all right? Obviously with some guidance and some education and doing some research and due diligence and all that sort of stuff. Okay, cool guys, have a great day, and remember, live with passion.